Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about inflation possibly dropping, Apple's earnings last night, as well as Amazon's earnings yesterday. But before we begin, as a reminder, this financial education presentation should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The inflation numbers are slightly lower in April than the numbers we have been seeing. Are we past peak inflation?
Well, good morning, everyone, and thank you, Allison. So peak inflation, we talked about this in either February or March. We were seeing numbers like 8% and, historic 40-year type numbers. And obviously inflation is still bad. But the question becomes, was that the peak, and are the measures that the Fed is taking plus, natural market forces bringing inflation down? Obviously, inflation can't continue to rage higher forever. It just doesn't work like that. So the question becomes, are we past peak inflation? And I think this is the first sign that I've seen that means that we could be, right? We obviously need more data points in, it's only April. We need the May numbers and June numbers also to start breaking down from the 8% down into the 5 and 6% range. And, there's many economists out there that call that by the end of the year, towards the elections, and everything's going to be back under control. It's going to be back towards that 3% or the ideal, kind of the target inflation of around 2%. So the inflation gauge, so I'm hopeful, I guess, to summarize that. But the inflation gauge you're talking about is personal consumption expenditure only rose 5.2%. Versus a year ago. There's another one down here about the core PCE prices, food and energy, 6.6, still the fastest pace since 82, but it's also breaking from the numbers that we've seen, higher. And then, the wage inflation, there's a number in here. Employment costs have accelerated 1.4% in the past quarter. Okay, so obviously is still on the rise there as well. But if all of this is starting to break, if you will, it's kind of like the fever breaking, right? So then we're on our road to recovery. And if that's the case, then I think that's very beneficial for the market for two reasons. Is, inflation's good, so you can, it's slowing down. It's going to help the economy from going into recession. And secondly, the Federal Reserve may not see the need to raise rates as aggressively as they had hoped, or they have at least talked to. And if they don't, then that will help the market overall as well continue higher. So overall, I think, Nelson, this is great news that is out this morning.
Next, Apple beat earnings significantly yesterday after the close, but the stock dropped anyway. What's going on with Apple stock?
Well, the numbers were amazing. I mean, really were, people, they beat bottom line, top line, and initially, this article that is, outperform, overweight, market perform remains the Morgan Stanley's top 2022 pick. Not in the article is Ankerstar Wealth's top 2022 pick, right? And has been for a while. So buy, everything is positive here. Let's go ahead and take a look at the stock though. And I'll show you the chart. We'll go to the 1 year. Actually, let's go to the 1 day. So here's what happened. So this green line right here is the end of the market day yesterday. This peak right here was right after earnings. All the algorithms and things, picked up on the Apple beat top and bottom line. So the stock went up. Gosh, I don't know. I think I saw 4%, something like that. And then they got to, remember, there's three parts of an earnings release. There's the revenue, that's your top line. There's your earnings, that's your bottom line. And then there's the forecast. And they forecasted supply chain issues. And then down the stock goes. So then it was down, 4, 5, 6%. And it kind of settled out from there. So it's going to open the day down about 1%. I think it climbs into the green during the day as people kind of process that the supply chain thing. Yeah, it's a big deal, but still the company's hitting on all cylinders. So really, does the stock deserve to get hit here? I don't think so. So I think it's a screaming buy. Also, you look at the metrics, they do have a baby dividend out there, 27 PE. For arguably the greatest company in the world. So overall pretty cheap out there. So I'll be buying more unless you already have a ton. If you already have too much, you don't need to go buy more. You have to be responsible and say, okay, fine, I'll just let what I have ride. But yeah, overall I like where Apple is. I think it's a screaming buy in this situation, even after the hit it took from its earnings release yesterday.
Also, Amazon released earnings yesterday as well, and the stock is down over 10%. Is ticker AMZN a buy, sell, or hold?
Well, you know, it's one of my favorites, and to watch one of your favorite stocks get hit by 10%. Ouch. That's going to move the needle on anybody's portfolio that has, you know, a decent sized position in Amazon in it. So, you know, JP Morgan, you can see the article here says investors should buy the pullback. Absolutely. I don't think the stock stays down 10%, even though the numbers were not what they had hoped coming out of the last quarter. But you do have the 20-for-1 split coming up. I think they have a buyback as well in Amazon. I didn't mention Apple announced a $90 billion buyback. So obviously Amazon thinks stock is cheap. So does Apple. Amazon does have the 20-for-1 split coming up. See if this takes us over to the charts as well. So really looking at the 1-year chart in Amazon, you know, there's your 10.23% down. I mean, look at this. This is crazy. So last summer peaked at around 37. Obviously, the whole market peaked around that end of November, December timeframe, whereas up at 37 now, down at 2,600. I would say it's really a screaming buy below 3,000. So it's, you know, a super good deal right now. No dividend. PE, yeah, okay, still a little bit high. So that's where there's your argument that can be made for people that are like, nope. Look at Amazon, you know, that's 2.5 times what Apple costs from a normal valuation perspective. I'm not worried about that at all. I think Amazon's going to continue to grow in several different areas. They have multiple ways to win, cloud services. They have their content, you know, and oh, by the way, they deliver stuff to the door, and they have their, you know, Amazon Prime income that's coming in. So overall, love Amazon. I think it's also a screaming buy here, but it's good. You know, it hurts a little bit as I see it trickle down to minus 11%, but I don't think that lasts. I think that does crawl into the green, not all the way up, you know, past 11%, but I do think we're seeing the low here at around that 2,500. So I think that holds. If you want to buy more here, I think you certainly can.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here Monday.